Hello, this is Big A with ETFtrendtrading.com doing the free overview today for November the 18th, Tuesday. I talked about this SPY trade yesterday. We were up during this down move. We made, well, it closed out and we did not close the position, and I told you a day ahead of time that if it keeps going down, we'll have an add-on position, which we did, one of our add-on positions, and then we actually had a reversal, and then we got out in this area. Those of you that are my members know exactly where that reversal was, and we closed out for a total of 1.12% profit. Now that's total out of the two positions. The second position was basically break even, but the first position did make more. So that was a good trade. Easy to do. Just follow the system. You know, we had a 1% risk on that trade, and it took a few days to get to there, 3 days altogether. And there was another trading opportunity I want to show you real fast, along with a trading tip. Okay, this is the QQQ 15 minute chart, and we did get a sell signal earlier, and then we sold in this area. This was right around 12 o'clock that day, and then we were able to cash out right in this area. We didn't get obviously the whole trend, we only got a small portion of it, and that's all that you need to get sometimes. I wanted to point out risk controls. I posted a new video, why have risk controls. Please watch that. The highlights of it are that you will learn how professional money managers trade with position sizing. You need to use a combination of technical stop along with a percentage risk stop. If you do just one or the other, it's bad. If you only say, here's my technical stop up here above this support or resistance, and I'll just trade however many shares it takes that I want to trade, and then use my stop, you're going to have different percentage risk stops each time because you're only using a technical stop. It's not good. If you do the opposite and say, I only want to risk 1%, and because my short signal was there, 1% with the number of shares is right here. Well, that's right in the middle of all this action. That's not a very good spot to put your stop. So the answer is you want to do a combination of both with a technical stop and a percentage risk stop, which means that you may need to trade less number of shares than you want to trade. And also you only want to risk 1-2% per trade, because the simple fact is if you lose 50%, you do not need to make 50% to make it back to break even, but 100%. That's a huge difference. So I made a whole video teaching this, and it's one of my emails in the autoresponders. Very important lesson to learn. I know with having the greed goggles on and wanting to maybe quit your regular job in the next week, you may not want to hear this, but it's absolutely true, and it makes it so your pressure is so much less. And listen, even risking those small amounts, when you catch these big trends, especially with the daily chart, you can still average over 12% a month, as long as you realize during the flat markets, during the sideways markets, you wait for a while. Let me show you one other one here. This is the DBA, and we are still short with the DBA daily. I talked about this a number of days ago, but we are locked in with half of our profit already. So what that means is we have no risk in the trade. So you've got to have a full system, not only the technical side. That's only half of it. The other half is the money management, and that includes position sizing. It's a little more than just saying put your stop here, or saying just risk 1 or 2% here. You've got to know the reasons behind it, and once you do, you'll be set up for long-term success. And that's what I tell people. Even if you never buy my course, I just don't want you to lose your money because you don't understand position sizing and risk management. It is absolutely key to your success, because any system, even the 99% winning systems, any system, and those ones don't work for the long term, by the way, any system will have 10 losing trades in a row. It's absolute fact. That's statistics for you over a period of time. That's the keyword, time. So if you plan on managing your own 401k or IRA or trading, for a long time, 10 or 20 years, and that's a period of time. And by the way, if you day trade, you'll probably get burnt out after 6 or 10 months. So that's why most people like the daily charts, because in the daily charts, you only have to trade 5 to 10 minutes per night. Okay, so here's the point. If you lose 10 trades in a row and you lost 5% on each trade because you're risking too much, that's a 50% drawdown. That means you need to make 100% to only get back to break even. It's not only hard to do, but psychologically it'll mess up your trading. But if you're only risking 1%, hey, that's only a 10% drawdown. You only need to make 11.1% to make that back. So please go watch that video. It's in the free video link. It says why use risk. Well, whatever it is, I know. I titled it, Why Have Risk Adjustments? Why Have Risk Controls? Excuse me, Why Have Risk Controls? So that's it for today. Thank you.